Welcome back to Fast Money. Time for a trader triple play. First up, regional banks getting rattled today, posting losses bigger than the broader financial sector. Fifth Third, Truist, Comerica, all hitting at least 52-week lows, even as yields continue to rise. Let's trade that. Key was another problem today, Karen?
Yeah, I'm sort of surprised. You would think it would set up nicely, right, with the yield curve being the way it is, but I guess we're seeing deposit runoffs, and so I was sort of surprised. I thought they would actually do better. I got to say, Fifth Third, I think it is one of the dumbest names of all time. I mean, that...
Not Truist?
Truist is so much better. Dress Barn, also really dumb. And the third worst, the Athlete's Foot, which used to be a chain.
This is a fun game. We didn't
that's all I got.
Be an entire section.
It's ridiculous.
Athlete's Foot. That's awful.
Next up, the letter T is tearing it up. Shares of AT&T zooming higher on a strong earnings report. The company sees wireless revenue rising at its fastest rate in over a decade. Stock's up 10% at the highs, put in its best day since March of 2020. Let's trade that telecom name.
Yeah, I would rather have Athlete's Foot than own AT&T.
Right.
I mean, yeah, good for them today. I saw the CEO. He did a great job explaining things, talked about how in order for the yield to go lower in terms of the dividend, the stock has to go higher. I appreciate that
makes a lot of sense. Wow.
That helped me. With that said, I mean, up until recently, the stock market's been on fire. AT&T has been awful for a decade. I don't see any reason why it's going to stop being awful.
It seems like, the players were fighting each other. Now they've ganged up to fight an entirely different industry, right?
Yeah, and an industry that's losing some ground. It's never been more competitive. It's not more competitive within the industry. And the failed media forays. And remember, the only thing AT&T had for it was, in fact, that it wasn't named Dress Barn and it had a big dividend. And at this point, who cares about a big dividend? In fact, people owned it for at least a yield, even if total return was awful. And I think in this environment with a 4.5% 6-month, you don't need AT&T stock.
Yeah, and you just got to point out T-Mobile here, the relative strength relative to Verizon and AT&T, and obviously the market, it's up 17% on the year. It trades very well. So there's something going on over there, even in this competitive environment. So, again, I don't find the forays that AT&T and Verizon had and all this other stuff particularly interesting. The pure play, I guess, is T-Mobile.
Last but not least, casino operator Las Vegas Sands jumping despite posting a bigger loss than expected in the latest quarter. Revenues did beat. Tim added to his position today.
Yeah, and look, I've owned this stock around this level now for 9 months, and it's been frustrating, but I also feel really comfortable both about the balance sheet, their business in broader Asia. So in Singapore, Sands Marina Bay is starting to show some real traction. But the multiple on this thing is down 2/3 from where it was. And I just, what we hear about these guys, and forget the madness that's been going on in China, as long as they hold those licenses, and I think we got some good news in China at the end of September. So this isn't going to be simple, but this is one that's going to be very rewarding.
I know you prepare for both Tech Check and Squawk on the Street whilst watching Fast Money, so you shall know that win was the W in my dawn trade this time last year, which has not been good. But if China zero COVID policy ever goes away and the world gets set back to some semblance of normalcy, Tim is right. These casino stocks, specifically LVS and Wynn, are way too cheap.
There is a school of thought that once we get done with this Congress in Beijing, that's the time when they make their move.
The irony is in the lead up to the pandemic, obviously none of us saw that coming here. The story for those names, Wynn in particular, was just Macau, and all this sort of stuff. And now it's just dead. So if you are a bit of a contrarian and you like to your point, and you say, what is that being valued at? That was what 2/3 of Wynn's revenues or something like that. That one at some point when it bottoms out around here is probably the way to go. Yeah.